Is the U.S. economy really crashing? No, it's not. It's correcting. Let me give you an example. People are still going to spend money, especially those that understand it's going to become a buyer's market for a while in different segments: RVs, cars, real estate. And it's started in real estate already. My mom got a killer deal, way better deal than she would have a year ago on a nice big piece of property and a house in Oregon. But it comes at a consequence, and the consequence was when she called me, she goes, "Man, that interest rate is way higher than I'm paying right now on my current home." And I said, "Look, at the end of the day, you're going to refinance the house. In 2 years, when interest rates go down, you're going to refinance. You're going to lower your payment, shrink your term." So she's at a 20-year term, six and a quarter. I said, if you can afford that payment right now, when interest rates go down, you could shrink it down to a 12 or a 15-year term at a lower interest rate, keep the same payment, and pay off the house faster. So everybody forgets that there's strategies to all this, right? So I'm sitting in the Sacramento airport today, getting ready to fly out to Indiana for RV Expo, and I was just like, man, it's time for me to do another one of these videos to help you guys out, to help you stay positive through this whole silliness. Well, the stock market's crashing. No, the stock market's not crashing. The stock market is correcting. It's correcting itself back to where we should be. That's the problem. We've been so hyperinflated for so long that everybody forgets that normal growth does not occur like it did during this recession. And a lot of companies, a lot of businesses are going to go out of business because they base their business model on an anomaly. You're going to see car dealerships start folding up. My brother just bought a brand new Ford truck for less than MSRP, for less than sticker price. Brand new, guys. I want you to understand that. Brand new truck, brand new Ford F-250, diesel, with all the truck shortages, bought it for less than sticker. Okay? In California. Dealerships are starting to wheel and deal because they overbought the used. So they were pushing my brother to the new because they can make a little bit of money, and they overpaid for the used. So the used truck he was looking at was only, by the time it was only said and done, was only $2,000 less, and it was 3 years older than the brand new truck. So just think about that for a second. The used truck and car market is crashing. The new car market is starting to correct itself back to where we are getting discounted prices. The RV market, the one I'm in, is a complete buyer's market right now. It is huge right now. The discounts, the heavy discounts are going in. So rising of interest rates is just going to get us back to where we should be. It's going to take us a while, but we're going to get there. So just folks, don't get, how do I put this without sounding like a dick? Don't let Fox News, MSNBC, CNN influence you on how you spend your money or how you do things. If you're in the market to buy a house and you're getting a good deal and you can afford the payment at the higher interest rate without it breaking the bank, buy the house, especially if you're going to be there for the next 20 years or 15 years. You can always refinance the house. You can always lower the interest rate once this thing all kind of correct itself, because at some point, guys, let's be real. At some point, the Fed's going to have to stimulate the economy. So how you stimulate the economy is you pump more tax money back into the economy, so you cut taxes and you lower interest rates. Right now they're raising taxes and raising interest rates to balance the problems that are occurring. Now, to me, they should have just done it 6 months ago, taken it the Fed benchmark up to 6%, and called it a day. If they had raised the benchmark to 6%, went from 0 to 6% that fast, inflation would have been cut by now. But no, political pressure. That's the problem. There's a lot of political pressure because it's an election year not to do anything. Oh no. We're Democrats. We got to keep our power. Oh, Republicans, if you crash the economy, I'm going to lose my seat in my Senate. I'm going to lose a seat in the House of Representatives. I'm going to lose power. So very, very difficult situation that the Fed is put in because of the political pressure that they get. and just give them credit. They're doing it. They're raising the rate that needs to be done. I mean, it's I know it sucks to hear this, but the other thing I want to make sure you guys understand, don't listen to the BS. A lot of BS about there from politicians saying that gas prices have been cut. Let me tell you something. I'm on the road a lot for my job, and here's the bottom line. The bottom line is I left for a 12-day trip. When I left here in California, in Northern California, gas was $5.49 a gallon. Okay. When I got back, gas was $6.20 a gallon. It went up 70 cents in 12 days. When I went to Montana, not that long ago, when I landed, gas at I filled up at the same gas station, the same Maverick gas station. It was $4.39 a gallon day one. Day three, I was in Montana, went up to $4.59, 20-cent increase in 3 days. Guys, gas prices are not going down; they're going to skyrocket. Interest rates are going to skyrocket. It's going to be 6 months to a year before we see anything. So just ride it out. Stay positive, folks. It will be over and done with in a year or less, hopefully. I hope.